Good morning, everyone. You are watching a live daily market outlook for Thursday, 11th of April 2013, prepared by Windsor Brokers. We're back after a couple of days of break. Unfortunately, I was sick and away from the office, so we are continuing our regular sessions as from today. One question that came, how is the financial situation in Cyprus, from one of the attendees. Look, depending how you see it, there is a certain tension between among the people. A lot of people are scared, and generally the businesses, local businesses, are quite down. This is what I get an information from a number of friends that run their own businesses, and they're sort of worried about the future. Another thing is quite strong anger between the people, as they are angry with the officials not knowing, not letting them know what was about to happen in Cyprus. Although if people were just reading news and connecting things together, then they should have the whole mosaic set and have the clear picture, because the crisis is not something that broke recently. It was building up. It's been a couple of years, and basically the strongest signals came in June last year, and then in October, when the country was already sort of bankrupt. With the latest news I read yesterday, saying that the government is running out of cash again, and likely may not have enough funds to pay the public servants' salaries and the pensions, with the selling of excess gold. That's what I heard this morning, worth approximately 400 million euros will come as additional funding for the government in order to fulfill their part of the bailout. That's from Cyprus. Situation is not very good, I have to admit, but a crisis that broke up worldwide in 2008 is still persisting. So more or less we got used to it, and we have to adjust ourselves until certain signals come that we are coming out of the crisis. As Mr. Draghi said in his last week's press conference following the rate decision of European Central Bank, a lot of headwinds are still ahead of Europe. The main fear among the investors was Cypriot situation, that most of them feared that this could be used as a model to apply on the other countries, as this is something precedent that happened the first time in history, and it could be bad sample, of course, for the other countries, as Portugal is now coming out as the next country in troubles. Then we have Italy and Spain. Overall picture is not that clear, not that brilliant at the moment, but we believe that, as Mr. Draghi said, that the Eurozone and European Central Bank will take all possible steps in order to handle the crisis and support all the members of the Eurozone. Situation in the markets quite unchanged in past couple of sessions. Single currency is slightly lower after a successful trip above 131, when the pair reached 131.21, and basically that was all seen. Subsequent easing dipped as low as 130.40, and it's, I would say, rather consolidating than correcting recent gains, as the overall outlook is still positive for euro, despite, as I said, the negative situation in the whole Europe. Current dollar weakness keeps the single currency supported for now, and if we take a look at the larger picture, then again we can see that this is basically corrective action of a larger downtrend of the single currency that commenced from the yearly peak at 137.10. Sterling remains flat, moving within 20-30 pips range, still unable, lacking momentum for a push above recent high at 153.62, but overall picture is still seen supported, as the downside remains intact at 153.00. Dollar yen is still hovering just ticks below psychological and magnetic 100 barrier, with scope seen for a fresh attempt and possible attack at this level. As we mentioned in our written analysis, further hesitation could occur ahead of 100 barrier, as quite extended conditions seen on the lower time frames may delay the final push through 100 barrier. Bank of Japan's last week's action gave excellent results as they reached their target, aiming to significantly weaken the Japanese yen, and basically the model used among the investors, as described, what I read this morning, buy everything that is against the yen, meaning that yen is about to weaken further against the major currencies as dollar yen approaches 100 level, and the euro yen holds steady just off recent highs at 130.50, seeing potential for further extension higher. Aussie dollar eased its recent gains, corrected the lower down to 105 psychological support, and this is quite strong support, and so far contained the dips. The trigger for the pullback was seen on the quite poor overnight jobs data seen from Australia, basically very disappointing data as employment change came at minus 36.1 thousand, dropping from very positive release of February that registered 71,500 new jobs, with forecasts seen at adding 5,400 new jobs, minus 36.1 thousand. Overnight release was quite disappointing. The unemployment rate in Australia jumped to 5.6 from 5.4 in February, and as well as forecasted level, and this was one of the main drivers of the Aussie dollar. However, it seems that this action was short-lived as the pair is again gaining pace, and seems that 105 base is offering good support, and it's reinforced by 55 days moving average, seeing more potential again towards the upside. Not many releases seen today from the calendar. Monthly bulletin from European Central Bank is due at 8 o'clock GMT. CPI, final CPI for March from Germany is unchanged at 0.5%. Unemployment claims, weekly jobs claims are due at 12:30 from America. 362,000 is forecast for today versus the 385 of the previous week, and at the same time import prices for March from United States are expected to drop by 0.4% according to the forecast in March, compared to increase of 1.1% seen in February. And basically among the few speakers that are due, the FOMC member Ballard and the MPC member Tucker that are due to speak at 12:30 GMT from FOMC, and at 1300 GMT Bank of England MPC's member. That will be basically all for today's calendar, and according to the fundamentals, we should not expect some spectacular releases today. From the technicals that we are going to take a look now, as I said, no significant changes seen in the most of major instruments and the commodities, except gold. That was, I forgot to mention, that was the top loser yesterday. Basically, the comments release of yesterday's FOMC minutes that came accidentally a couple of hours earlier, being distributed to a limited number of users, are now under investigation. But more important thing is that consensus was reached for possible ending the quantitative easing by the end of this year, ending of bond buying by the end of this year. This was basically the main comment, the main release of the FOMC minutes. And as said, U.S. officials are now doing investigation how it happened. That release came out earlier. We spotted it yesterday immediately after being released, as some comments came out, and managed to handle the situation, though there was no stronger impact in the market following the early release, as the most of investors were not aware and were expecting it in the late afternoon hours. From technicals, as said, a single currency, we're in the hourly chart, shows quite a steady situation, with the euro of recent high at 131.21 and the easing down to 130.42. holding a positive near-term tone. As we can see on the 4-hour chart, 20 days exponential moving average ascending contained the dips at 130.42, and the fresh strength that is emerging now at the beginning of European session again keeps more focus towards the upside. Basically, the freshly established bull tone of recent lows at the 127.50 zone, where the double bottom was created, now sees potential for further extension higher. We have immediate resistances and quite significant levels. 38.2% Fibonacci retracement of the larger 137.10 to 127.44. Descent at 131.13 has been cracked on yesterday's surge higher. Unfortunately, the pair did not sustain, managed to sustain gains and dipped lower, but as said, overall positive tone still keeps the focus at the upside. We have 131.33 high of 8th of March, as well as 131.61 28th of February peak. Basically, we need to see the break above these levels to confirm the end and full retracement of the bear phase from end of February until beginning of April. As break above 38.2% retracement, and the previous highs is to confirm the bottom, double bottom at 127.50 zone. On the upside, we have also the bearish crossover of 55 over 90 days moving averages that keeps additional pressure on the pair, and break here is set to open another significant level, 132.27, that marks 50% Fibonacci retracement of the entire move. As said, lower time frames situation is still positive. Studies are positive and see more potential towards the upside. On the downside, initial support, as said, was at 130.40 overnight's low, and the 20 days exponential moving average. While further lower, we have another significant support level at 129.70. We have 38.2% retracement of the recovery rally from 127.44 to 131.21, and Fibonacci 38.2%, the lows of 8th of April, as well as 55 days exponential moving average, and basically any break below 129.70 would weaken the near-term structure and allow for a deeper reversal. Otherwise, more focus is still seen towards the upside in the near term. British pound holds neutral tone and trades within a very narrow range, with downside being protected at approximately 153, where the 55 days moving average holds the downside, and the upside, the initial narrower range top at 153.40 ahead of recent peak posted on last Friday at 153.62. So far the pair lacked momentum to break above this level, but as we can see on the hourly chart, the studies are still slightly aligned towards the upside, and see again more potential for a final push through 153.62 to resume the recent bull leg that commenced last week from 150.32 low for a possible test of the upside barriers. 154.00 is around figure resistance, and the 154.22 Fibonacci 38.2% retracement of the down leg from 163.80 to 148.30. As we can see on the larger picture, basically the current bounce is seen as corrective of the larger down move from 163.80, but from the other side, a regain of previous very strong support and the multi-year range floor at 152.30 zone now gives more credibility to the recent recovery rally from 148.30, and sees potential for a stronger recovery towards the upside, with the initial barriers 154 and 154.22, a break of which is set to resume recovery towards 156. That marks 50% retracement, and is reinforced by descending 90 days moving average of the daily chart. On the daily also, the recent break above 55 days moving average that currently stands at 153.11 and now acts as support is seen as a further boost for the pair. Of course, break above 153 153.62 is required to resume the recovery. And on the downside, good supports at 153.00 and 152.37. This is the low of 8th of April 2013, and it's also 38.2% retracement of the uplift from 150.32 to 153.62, and it's reinforced by 55 days, ascending 55 days exponential moving average, and any violation of this support would delay immediate bulls in favor of some stronger pullback. And dollar yen continues to flirt with the psychological 100 level, but still unable to break it. Recent high posted yesterday at 99.86 was the highest seen so far, ahead of pullback down to 99.35, and then fresh strength again to 99.75. Basically, the current action could be seen as a consolidation under a strong 100 resistance, with the near-term structure now. Hourlies are quite neutral at this point. Pardon, this is 30 minutes. Hourlies are still holding in the positive territory, with the price action being above both 20 and 55 days moving averages. That keeps focus at important 100 barrier break, of which could be a signal for a stronger recovery. As said, yen's weakness established after Bank of Japan's action continues, and hesitation I mentioned in the previous reports is seen mainly on the overbought conditions that were seen on the are still existing on the 4-hour chart, and preventing the pair for a final push through 100 barrier and extend up towards next targets at 101.40, 101 and 101.40. As said, the overextended conditions on the 4-hour chart are still keeping the upside limited for now. Daily structure is positive, though the RSI is approaching the overbought territory, but overall positive tone as part of the larger uptrend of dollar yen that commenced in October 2011 and still lasts, with the latest strong leg higher starting in September 2012, seeing the upside still favored us. The pair now touched already 50% retracement of the larger down move from 124.14 to 77.55 record low of dollar yen, and basically break above this level is seen as a further trigger for a stronger reversal. On the downside, set 90.900 offers initial support ahead of 98.58, which marks a recent range floor, and basically holding above these levels, and the weekly low at 98.00 will keep immediate bulls intact for attack at 100 and break above this level, while penetration on the downside of 98.00 would be seen as a trigger for some stronger corrective action. If we take a look at Fibonacci levels of the latest rally from 92.70 to 99.86 so far, this comes at approximately 23.6%. Then we have last week's close at 97.60, and quite significant support at 97.12, 38.2% retracement, high of 5th of April, and is reinforced by 55 days exponential moving average, and the violation of this level could be the initial signal of some a stronger pullback. Until then, more focus is still seen towards the upside. As mentioned, the Aussie dollar was impacted by overnight's release of quite disappointing jobs data, but it seems that the pair recovered its recent losses. A dip to 105.00 psychological support was also contained by ascending 55 days moving average, and the fresh strength now is attacking yesterday's high at 105.51 for possible resumption of the uptrend higher, as recent strength through previous peaks at 104.96 now sees more potential towards the upside. We have the immediate targets 105.77 high of 22nd of January, and then annual peak of 10th of January at 105.97, regain of which to a signal completion of full retracement of the down leg from 105.97 to 101.14 as a strong rally and the recent break above the congestion and the range top at 104.96 and now sees more potential for final push through towards 105.97. And then we have the larger this is the first range that lasts since August 2012, basically slightly above 106, 106.23 is the highest point of this range, and break above 106, 106.20 will be seen as additional support for a possible further recovery, as this will signal a break above range since August 2012 and may open upside levels at 108.55. This is the high of February 2012. On the downside, as said, 105 offers quite good support, and any dips should not exceed this level in order to keep immediate bulls in play. This is also approximately 23.6% retracement of the initial rally from 103.47 to 105.51, reinforced by ascending a 55 days exponential moving average. Any break lower would face another strong support low of 10th of April and 38.2% Fibonacci retracement at 104.73. 50% retracement is at 104.50, and basically a break above the previous 104.73 would be quite a strong signal of stronger weakness and stronger corrective action of the recent rally from 103.50 to 105.50. As said, gold was the top loser yesterday as yellow metal reached its initial target at 1590, and that was all seen and was followed by a steep pullback down to as low as 1553. Again, bringing in more in focus, bringing the downside in focus, and as the biggest part of the recovery rally from 1539 to 1590 has been erased, nearly 76.4% being retraced, and now more focus is again seen towards the downside. 4-hour indicators are now well in the firmly in the negative territory and all pointing lower. That keeps immediate focus at the downside. Similar situation with the hourly. Brief corrective action was seen on the oversold conditions, but overall negative tone established on yesterday's pullback sees more focus down towards supports at 1549 and finally 1539 low of 4th of April 2013, break of which is to again bring in focus strong support and multi-year range bottom at 1520 zone, approximately 1520, 1530. This is also the critical support, as this level holds the downside since September 2011 and prevents yellow metal from some stronger corrective action. This is also close near 23.6% retracement of the rally from $2,270 per ounce up to $1,920 September 2011 historical peak of yellow metal. Again, downside becomes more vulnerable on the recent weakness, and basically the clearance of break below 1520 and 1500 is psychological support could extend initially losses down to 1475. This is the Fibonacci projection. I don't know whether we have this somewhere or not. Unfortunately, we don't have it, but this is the Fibonacci. There it is. Okay. Fibonacci projection of the latest down leg from 1616 peak of 17th of March 2013, and this could extend down to, if this is correct, 1562, It's Fibonacci 100% expansion at approximately 1475, and in case of a break below 1520, this wave could extend as low as 1474. Interim supports are at 1528, which is along with the critical support 61.8% expansion, and then 76.4 expansion at 1508. And finally, just to mention that upside remains now well protected and remains out of reach. Initial resistance is approximately 1567, 1570, while any change of the current outlook requires rally through and regain of 1590 as initial resistance, with the break above 1600 psychological barrier seen as a confirmation, and this is required to prevent the immediate downside risk that is currently quite high, as near-term indicators are quite negatively aligned, and see more focus towards the downside supports. I do apologize, so we have small technical problem. I think few seconds and it's going to be solved. Okay. Crude oil. Wow. If we start from the daily, then we can see that the price action is still well supported despite the recent pullback of peak at 97.68 posted the 1st of April, that dipped down to 91.93. This marks also Fibonacci 61.8% expansion of the wave from 97.68, where the support was found also just above 200 days moving average, and the trend line support with fresh strength higher again, bouncing to the levels close to 95 barrier. As said, positive tone is still present in the daily chart, and sees more focus towards the upside, as 55 days daily moving average currently limiting the upside at 94.59, break of which is to resume gains towards our initial target at 97.68. Now on the lower time frames, bounce of the recent low at 91.93 seen last Friday is still steady. The price broke above both 20 and 55 days moving averages, and looks for a possible extension higher, with the retracement levels see so far 50% exactly of the downleg from 97.68 to 91.93. Break of this level is to open 95 psychological, and the 95.48 61.8% retracement, as the 4-hour indicators are now moving into the positive territory. I would say more focus is still seen towards the upside. 55 days moving average that is currently moving sideways is supporting at 94.25, while 94.00 psychological support is reinforced by ascending 20 days moving average, and the further extension higher is seen well supported, and likely for now only break below 93.40, which is the low of yesterday, could be more harmful for the current price action. On the hourly, situation is again showing positive signals, though the lack of momentum is still evident, but holding above initial 94 and the 93.30, 93.40 support is still keeping the upside favored for now. And this was all from my side. If there is any question, please, I would like you to submit it now. Apart from this question about Cyprus, is there anything related to the markets? Thank you for your offer for help. I can just see one of the messages. As some people say here, give me some money and you help me, no problem at all. Anyway, it's quite a lot. I received quite a lot of messages from people worldwide asking what is going on and if there is any way to help. So we feel quite good and well supported here despite the quite difficult economical situation. We feel that we are not lonely, and as a number of people, especially in the Facebook, there is a lot of support for Cyprus. It seems that we don't have further questions for today. In that case, we will conclude today's session. I would like to thank you all for being with us and for patience during past few days while I was absent. We are continuing regularly as from today, and the next regular session is tomorrow morning at the same time at 10 o'clock local Cyprus time, 7 o'clock GMT, and expect to see you with us again tomorrow. Until then, I wish you a nice Thursday and of course a lot of success and profit in your trading. Good luck.